Hey guys, welcome to this video. I'm going to show you step by step exactly how to enter a 112, how to pick the right delta strikes, and how to actually enter the trade. And so again, I will be doing this on my Tasty Trade broker, but you can do it on any broker you want. So by the end of this video, you'll know how to pick the right levels, what it means, and how to actually place the trade and get in it. So let's dive in. Guys, I've been using 112s here. You can see on, let me make my face smaller, on CL and ES. And I've been trading these here for a bit, and I'm making about $5,000 to $6,000 a month, and my account is up now $21,300 since trading 112s this year. So that's how awesome this is, and I love it. So let's dive in. How can you enter a 112? Well, first off, we need to pick the right asset. Again, if you're trading with an account that's above $20,000, I would recommend trading ES because that's what's best for larger accounts. Each trade takes about $8,000 of buying power. Now, if you have a smaller account, less than 20,000, you should trade 112s on MES, which is the same thing as ES, but a micro version of it. And so it costs a tenth of the price. So it costs about $800 per trade. And so again, that can help you kind of define which asset you should be trading. Now that you know if you should be trading ES or MES, here's how you enter that trade. Well, first off, we go to the trade tab here. We go and we pick our expiration date. So again, for most trades, you want to be between 90 and 120 days. That's typically your best range. Now, for those of you who want to know what each one means, the further away you go, so like if you're going to about 120 days, you'll collect more money, but it will take you longer to make that money because you have to be in the trade for a longer amount of time, like a month, 2 months, maybe even 3 months, to be in that trade to realize the profit. Now, the shorter in you go, let's say 60 or 80 days, then you'll make less money, but you'll make it faster because you can make it in about a month or less because the contracts are expiring so quickly. And so again, it's all about what you want to do risk to reward. Now, what I recommend for most people is you just do a 90 DTE. It's a good middle ground. This is what I do for all my 112 trades, is find the expiration date that is closest to 90. So you can see here we have an 85 and a 95. You can see here actually that I already have positions on the 85 days out. You can see here my 112s and different things like that, how they're all structured. But what we're going to do is we're going to start off from scratch and say we're just going to pick this, the 95-day mark. So again, if in doubt, do 90 days or closest to it. So this is 95, so we'll pick that. Now, how do we know what strikes to enter at? So again, the best practice and recommended is this. So I'll show you how to structure it, how I do, and then I'll explain why I do that and how you can change it if you want. So right here, I buy the 25 delta. So again, which one is closest to 25? Well, I'll just pick the 27. So I'm going to buy this one. Oops, that's a sell. I'm going to buy this one. Buy this one. And then I'm going to sell the 23 delta. So I'm going to sell this one. So buy the 25 or closest to it delta. Again, if you don't know what the delta is, you can click here and change that delta price. And then we're going to sell the 23 delta. This creates our put debit spread that makes money to the downside, which is a part of the 112. Next, I go down to 7 delta, and then I sell 2 of these. So I'm going to click on this and up the quantity to 2. This is how I structure my 112 trade. I buy the 25 delta, I sell the 23 delta, and then I sell 2 of the 7 delta. So you can see right here that I'll make $1,400, $1,400 if the trade continues to go up. If the trade hits the bear trap, then it'll make $3,900. And again, you can see that if you pull up the curve. Now, how much does this trade cost to put on? Well, it costs $7,000. And guys, remember, because of span margin, which is the type of margin that futures contracts use, you want to make sure to use at least 50% of your buying power or less when you're putting on these trades because the buying power can expand with risk. Okay, so you can see here we'll make $1,400 by putting up $7,000. That's a great return, literally an insane return, 12, 15%, somewhere in there. I think it's actually even closer to 20. Like it is, yeah. It's a 20% return. That's how awesome this is. So you make about 20% return on about 30 to 45 days is how long this trade takes to close, based on take profit levels. So that's how we structure the trade. Now, what does this 7 delta put do, and how do I know to do it at this level? This is the base of your trade. The 7 delta is what makes all your money. So again, if you want to make more money, you can move this up. You can see here I used to make 1,400, now I'll make 2,000 on this trade. So again, this will make more, but it also lowers my win rate. You can see here I have a 94% win rate. If I push this back to 7 delta, I have a 97% win rate, but I make less. So again, that is the change. The further out I go with this one, the higher my win rate goes, because the less likely it is to hit this level, but the less money I make. So again, I recommend staying anywhere between 5 to 10 delta. That is the zone we want to stay in. I like 7 because it took 7 days for God to make the, okay, maybe 6, but he rested on the 7th day. So I like 7. That's just a personal preference though. For the put debit spread, how do we structure this? Well, I put them back to back if I can, because then that gives me downside protection, but it doesn't take a lot of the profit. The further of a distance between these two, the less money I make, but also the more downside protection I get. So you can see here, if the market were to crash at this level, I'll make roughly $4,000. So if the market were to go down and land in my bear trap level, I would make 4,000. If I extend this, I now make 1,000 if the market goes up, which is less, but I now make 6,000 if the market were to drop. So expanding this put debit spread is what creates the wider trap. So again, if you're doing best practice, buy the 25 delta, sell the 23 delta, and sell 2 of the 7 deltas. That's what I do, and that's what works for me. You'll click review and send. Now again, you can see here how it works for me, because Stacey Trade now supports it. If your broker forces you to submit it in different orders, then again, you want to just enter the 7 deltas that you just sell those puts, and then you'll enter in the put debit spread, and then you'll combine them together. But you can see here, I can enter it as just one, and so again, I'll submit this trade and I'll enter in. Now, let me just go back here and say, if you're having a hard time getting filled, we're selling to enter this trade, which means that if you want to get an instant fill, the best place to put your price is at the bid, or at this side. Why? Well, because if we're selling, we need buyers to take it from us. So the fastest place to get filled is by putting it closer to 27.50, and this would be more of an instant fill. So again, I recommend doing the mid price first, because that's going to be your best fill level. But if you don't get filled on this price, move it down to the bid price, and you should get an instant fill from there. And so that's exactly how you enter these trades. Now, if you're someone's like, okay, Austin, this is cool, but it's a bit overwhelming. Like, I want to make sure that I place these trades correctly. Well, that's exactly why I made the options auto trader. It completely automates your 112 trading. You can see here all my 112 trades have been placed, managed, and hedged and protected all by the options auto trader based on how I set it. And this 112 auto trader has made me 16,000. Now, I may be like, how in the world does this work? Well, simply you create an auto trader, you connect your TT Trade account or any account you have. You create an auto trader, and again, you can automate any option selling strategy. But for this instance, we're doing 112s. Again, if you're small or large account, depends on what you want to do. Let's just say I want to do an MES 90 days out. I preload all the best practices. You buy the 25 delta, you sell the 23 delta, and again, between 5 to 10 for this one. Let's just bump this one up to 7. So I sell 2 of the 7 deltas. From there, I say how often do I want to enter this trade, and it will enter whenever I tell it to enter. So again, I can enter once a week on Wednesdays. It's pretty standard. Take profit percentage, you typically want it around 80 to 90%. Stop loss, you can have a 300% stop loss. And because this automation system is built for 112s, you can even turn your 112 trade into a hedge automatically. So again, I can close the entire trade at this profit target, or at the profit target. I can turn it into a put debit spread hedge, a ratio hedge, whatever I want. Let's just leave it at a put debit spread hedge. I say how much money I want to use to trade. Let's say I want to use $2,000 to trade. Save and continue, just like that. I created an auto trader that will automatically trade based on all the rules that I set. And so again, I can just save and set that live, but just like this, I have an ES112 automation and a CL112, and you can see here that they're each making me thousands of dollars. So that's awesome. I'll keep that running. So if you're someone who loves the 112 but who hates having to enter, manage, turn into hedge, or feels like it's a bit too overcomplicated, then again, you can use this automation system to enter, to have your take profits managed, your exits managed, your hedges managed, all for you in one place. And not only that, it makes more sense than the broker. Why? Because it shows your whole trade group together. It shows the profit. It shows you based on a simple graph how close you are to your take profit and how close you are to your stop loss, depending. And even when it turns the trade into a hedge for you, you can see the details of that hedge. How much protection is this hedge giving me? How much does this hedge cost? And based on my other trade that I closed for a profit, how much total profit will I end up with? It shows it all there for you. And it even gives you graphs and data that tastytrade wouldn't give you. So again, if you're interested in automating your 112, click the link down below. All right, guys, see you in the next video.